Canada needs another 5.8 million homes by 2030 to tackle affordability. Yeah, I'm going to break that down in this week's episode of Prime Property TV. Promise you, it'll be worth it. Good day, Toronto. Welcome to another episode of Prime Properties TV. So glad you can join me here today. On today's episode, we are going to cover why we need 5.8 million more homes to tackle affordability by 2030 in Toronto, in Canada. The next topic we're going to have after that is another $9 billion spending from the Liberal government. And then lastly, but not least, the removal of a stress test. It's in the works, right? But obviously this is not for Canada. It's about England, but I'm going to talk about why that's actually important, right? So without further ado, the first article we have here is Canada needs 5.8 million new homes by 2030 to tackle affordability crisis, CMHC warns. Now, there's been a lot of talk about this. That's why this is the headlining article I'm going to talk about in this week. But if you do want to read the full CMHC report, I'll put a link in the description below. It is there. So some of the points I've highlighted here is the fact that right now we need $3.5 million, $3.5 million more homes to tackle affordability. So right now they're on schedule to build 2.3 million homes, right? So, let's just, give us the benefit of the doubt, 9 years, I'm just rounding it upwards, right? Technically 8, but let's just call it 9 depending on when you count it, right? So at that rate, when I was doing the calculation, we're building about 255,000 homes in Canada per year. So that's kind of what the benchmark is and where we're going. And what they're saying that is that we need an additional 3.5. So 2.3 plus 3.5 for a total of 5.3 million homes. So to build another 3.5 million homes to tackle affordability, you're essentially kind of like doubling the rate at which you're building homes, right? So I did the math on that. You have to build basically about 388,000 homes. So we need to build about 280,000 plus another 350,000 just to reach affordability. So we are really far behind the 8 ball right now. And it's actually kind of ridiculous. And this is kind of why I want to lead with this, to kind of give you some thinking of, is this even doable? And I honestly don't think so. I really don't, right? And the reason why I'm going to show you this is, in this chart right here, it says Canadian housing starts, basically since 2000. And on the y-axis over here, you can see that it's in thousands and how many homes we're building. So let's say at the peak when we were in 2020, 2021, we were building maybe like 320,000 homes a year. So remember the numbers I told you before? To build the additional 3.5 million homes we need to tackle affordability, we need to do about 80,000 homes. So the peak in the last 20 plus years we built at was 320. So that means in order to build those additional homes, we need to build more than what our peak was. Plus, we got to build the original that we have right now, which is about 255 at the pace that CMHC thinks. So 255 puts you kind of like out somewhere here, which I would say is kind of average. And this is kind of what the scary thing is, right? You got to basically build at the peak plus more and compound it on top of it just to get to affordability. So I really don't think that we're going to be able to do that by 2030, which is kind of a really, really scary thing, right? And to tackle affordability, like, the definition of affordability, I've talked about it before. Everybody has a different definition of it, right? So in CMHC's report over here, you can see that they're right now looking at the average price as of 2021, by the way, which is actually a little bit lower, but let's just say the market comes down there, okay? In Ontario, the average price is about $870,000. BC is about $900,000. And this here has a percentage of how much income you're spending, right? So in Ontario, you're spending about 60% of your income, same with BC, on a home, right? So which is actually quite a lot. And in scenario 1, by 2030, they want to basically bring this to about $500,000 per average home. So they're effectively saying that we are going to go into a deflationary kind of aspect of Toronto homes. Now, it's not to say that the price is going to fall by that much. It's to say that they can build enough supply so that it tapers the demand side of kind of housing so that it doesn't get bid up. So there will be some kind of deflationary effect on pricing. Now, is it going to happen? I don't think so. Now, one of the things that this article is saying is they didn't look at the demand side, which kind of is like interest rates, right? So let's look at scenario 2, which is they're saying they're not going to make it. They're going to try to build a little bit less homes and make it by 550,000. I honestly don't think that's going to be happening, right? And a very different way to approach this, not from hey, can we double the rate we're building homes, from 250 to 500, is look at it this way. When you have set prices, such as like a house, right? If you think about a house, it's like a bundle of commodities, right? So you got copper, steel, concrete, all these things that are required to build it in addition to labor. I'm not even counting the land. That component right now in kind of the macroeconomic environment we're in is not going to be deflationary. Like there's a war going on right now fighting for stuff like that, right? So I really don't think there's an ability for us to produce that many homes given that the commodities that require to build, like the bundle of commodities to build that home is actually going up in price. So therefore, you're saying that in order to reach this number, you actually need the piece of land to come down in value, which I don't think so. Or you need the labor to come down in value, which I also don't think so, because everything is inflationary right now, meaning things are going to go up. So the only way for, I think, homes to be more affordable is if prices go up while wages go higher than prices, right? So we're going to get into kind of like making assets worth more nominally in like dollar terms, but overall we can try to drop down the percentage in which you're spending the income if you can increase the income faster than the housing price. That's one way I think to do it. Or, you know, like with most people, I just don't think affordability is going to be a thing right now. And one of the things to remember is like these housing starts here, they're also including purpose-built rentals, right? So it's not just all homes for people to own. So there's some distinction between that. So I don't know how CMHC has distinct, like, you know, if you need 5 million homes, is that on a purchase side or a rent side? That they didn't really go into too much detail in the report. But if you kind of just like follow the idea of like number of homes and starts and completions, or just how they're going to drop the price to like $500,000 home, I just don't think it's possible. Like I was thinking, like, you know, through this before I started the video here, is that like the other way to make a home more affordable is they get smaller, right? So, you know, instead of a bunch of like land-based freehold properties, it's just a whole bunch of like condos that get really, really small. And yeah, then obviously it'll come down, right? Because it brings down the average price because your, you know, basket of products you're selling, like the homes, get smaller and smaller and smaller, right? So it's really the only way I can find it, but this kind of housing crisis, it's unreal. And this is one of the things that you have to also remember. The demand side, which is immigration, we have immigration set as a target, I think 2024 or 2025, about like 430,000. If that target increases, it would be worse off for this housing affordability. If that target decreases, then obviously there's less demand side too. So there's a lot of things at play right now. And me telling you about this is not so much saying, hey, prices are going to come down, prices are going to go up, you should buy now because there's a lack of supply in immigration. It's not that. It's just that CMHC, being the crown corporation for housing, is looking at the study and it's calling out that we have a shortage of homes. And they're saying that they want to get to this target. And I'm just calling them out on the target that they want to get to. Ain't happening. It ain't happening. This may be like the pandemic, you know, prices drop 30% again, but you know, who knows? So if this is the type of content you enjoy, make sure you help us spread the knowledge by smashing that like button and subscribing to the Prime Property channel, because every single week we put up awesome content like this and I give you a little bit of my critical thinking to give you an idea of what I think is going to happen and what I'm seeing right now, so that you can be informed and educated on the real estate market, specifically in the GTA, so that, you know, whenever you're ready to buy, sell, invest, and whenever you are ready, right? There's no rush, especially in a slower market right now, but you can always be opportunistic right now. It's like some of my clients right now are moving up the real estate ladder, because if all the prices are coming down as a percentage, moving up the real estate ladder means that the dollar value that you are buying into is dropping more than what you're selling. So if you're a condo moving to a home, like a freehold home, or like a freehold home moving to like a bigger detached home, it's actually a pretty good opportunity to do that move right now, right? So if something of that is of interest to you, you can reach out to me using the link on the screen right here. It's www.chatwithzen.com. Now on to the next article here. We got Christina Freeland details $8.9 billion, we'll just round it to 9, measures to tackle affordability in a first major speech since budget. So who is she? She's like the deputy prime minister, I think, so like second command after Trudeau. And she's basically saying that, hey, look, here's some more helicopter money to fight this inflation, right? And I think this is just a terrible way to fight inflation, but it's the popular way to fight inflation, because those who are suffering from inflation on the lower income side, they need the helicopter money to survive. And when you constantly give the helicopter money, people, they just rely on it and they stop working, right? So that's kind of inherently where we may end up, like universal basic income, UBI. But these are kind of like steps to start it. But the problem is, it's kind of like the analogy. You teach a person how to fish, then they're good for life, but you just give them a fish each day, they're going to rely on you. And right now the government's giving a fish each day, or every periodically time to give people. So, and that's going to be a problem, because when you inject more money into the system, you have more money chasing less goods, therefore inflation goes up, right? So this whole mandate to fight inflation, but also throw more money at the problem, it's really counterintuitive and honestly pretty stupid, right? But let's just go through it. So over here, we got the affordability plan outlined at $1.7 billion this year. It's going to go and give people up to some more benefits. Some families can qualify, so another $2,000 or $1,200 depending on the number of families you have, right? You got your OAS, which is your old age security, going up by 10%. I think that's much needed, but I don't think the 10% is going to make or break anybody, honestly, like from the older people's side, because inflation is obviously way higher than that on a compounded amount. And then you also got providing a one-time housing affordability payment of $500 for low-income Canadians, right? So yeah, okay, you're going to give that $500 to the low-income family, but then they may put it towards like food or rent, and it's gone. But inflation is persistent, right? So there's a really good analogy I heard where it's kind of like, I always compare real estate to monopoly, right? If you, as the person who's watching this, are a real estate owner or investor, whatever, you have the houses along the board, right? So the people that are constantly going around the monopoly board, they're getting $200 from the government each time, or $500 every time they pass go. But you know what happens when you're losing? Basically just keep paying rent to the people who own the assets, right? So yes, right now you're saving the people who, are passing go and getting a little bit of minor relief, but ultimately that money is going to end into people who own assets. And it's not just like housing, it's in different type of assets as well. Even though right now all the assets are coming down because the interest rates are going up, ultimately, if you just keep doing this and giving people money, that money goes into the people who own the assets hand. So this is a form of like financial repression where assets are going to constantly go up because it's going to beat inflation, and you really got to get on the asset ladder, whether it's stocks, crypto, or real estate, whatever you do, right? You just figure out what works for you. So from my side, like, as long as whatever it is you're holding produces some kind of income, whether it's cash flow, dividends, that's generally a more defensive stand on where I would recommend you be right now, given the nature of like, everything's risk off on the asset side. So ultimately, again, circling back to this, terrible idea, but this is going to be inflationary. And how inflationary? We don't know. We'll see. And then we got the last article here, which is Bank of England withdraws mortgage affordability test. Yes, this is not in Canada. Maybe we'll see it soon, but this is super, super interesting, right? So you can see down here that they are removing the mortgage stress test on the Bank of England side effective August, so in the coming 2 months, right? And this was introduced in 2014. So they've had it for 4 years longer than we had ours since ours came in 2018, right? And why would they do this? You really got to ask yourselves, right? So, they said right here that, they don't want to become a threat to financial stability by taking on more debt. In a world where interest rates are going up globally everywhere, real estate, crypto, stock, all the assets are coming down in value. Why are you lifting the lid off for how much money you can borrow for your house? Think about that, right? It's because people can't buy homes anymore, and they need the home purchase to stimulate the economy because it's such a big component, right? Now, obviously, I don't know the England market as well as I know the Canadian market or even the GTA market, but that is just a type of policy that they can go bloop, and change it so that it stimulates the market, right? And I'm not saying that it's going to be happening to Canada soon, but they were talking about reviewing how many times or how quickly they can review the stress test from OFSI, right? So they've already kind of planted the seeds. And would I be surprised if they lift the stress test or they make it a lot easier to qualify? Probably, because if we are going to get the 75 basis points that everyone's talking about on July 13th, we're on the borderline of breaking almost everyone's trigger rates that got at 1.5%, give or take, right? We're also going to be, for the stress test, right at the brink of the posted rate, meaning that the people who are borrowing to get a house using fixed has already been tested for over 5.25, and with another 75 basis point hike on variable, we're getting very close to 5.25, if not over. So therefore, total buying power is going to come down, and that's going to affect the market some more. And I'm looking at some of the numbers already for June. I'm pretty sure June is going to be super weak, super weak, like 20-year average low in terms of sales, and prices probably like coming down a little bit too on average, right? So stay tuned to next Thursday for that. I think that's when they release the data. But the idea here is once they see that this data is really weak, and at the end of Q2, and if US does see like a recession, like 2 consecutive quarters of negative GDP, yeah, I would not be surprised if they want to stimulate the market. That's the first thing they're going to do, right? So again, just pointing something out that I think is happening. This is not a bullish case for what real estate is. It's still coming down. I'm just saying these are the next kind of levers that the central banks can actually start pulling to kind of stimulate the market again. So hopefully that gives you an idea of what's happening in the real estate market right now. It's going to be a little bit slower right now in the summertime. I think the freeholds are going to slow down. The condos are also slowing down a little bit. And even Bank of Canada is taking August off. There's no interest rate announcement then, right? So July 13 is basically probably going to be the last time we'll be talking about interest rates for a little bit. And then the next one will be in September, kind of when everything kicks off. And we'll see kind of how much inventory gets built up between now and say end of August, right? Because that'll be an indicator of how September as a fall market will start. And make sure you stay tuned to this episode and this channel to see what's going on, because I will be providing you an update. But anyways, if you are looking for some help in the real estate space, whether you're buying, selling, or investing, you can book a call or strategy call specifically with me using the link right here. Otherwise, until next time, your move, your future. See ya. Now that you're done watching this one, how about this one? Oh, you know what? This one's good too. Ooh, this one's really good. You know what? Just watch them both.